The latest report by the Korea Development Institute gave mixed prospects for South Korea's economy and that it sees both recovery and challenges. Against this backdrop, the KDI will announce its economic outlook for the second half of the year today. To discuss its latest assessment, we're joined by Lee Seo-hyun, Assistant Professor from KDI School of Public Policy Management. Welcome to the show.
Hi, good morning.
Well, Professor, again, the latest prospect for September was mixed. Well, let's first talk about the optimistic side. What was the major factor you would say leading to the economic recovery?
Yes, indeed, various economic indicators are showing some signs of recovery. Industrial production year-over-year growth rate was up by 1.5 percentage points, led by semiconductor sector and as well as primary metals. The service sector has shown modest growth supported by the tourism sector that is gradually returning to normal after the COVID pandemic. And the construction sector remains strong in terms of the value of construction completed. And looking at the external sector as well, the latest trade data indicate improving signs of export. In October, export actually rose for the first time in 13 months as export to the U.S. rose.
Well, the KDI has been noting signs of recovery for the past few months now. It seems like the latest report has enhanced that view. Would you say that the country has hit its lowest point and that its recovery is picking up pace?
Yes, as a technology cycle is expected to turn the corner, the growth is likely to improve in the second half of the year. In the medium term as well, the real GDP growth will be just over 2%, and the recovery appears relatively resilient. And the risk to the economic outlook actually tilted to the downside, but compared to a couple of months ago, it is more balanced.
Well, despite all this, the report did maintain the stance that the country faces external uncertainties, as you have mentioned just now. What kind of challenges are we talking about exactly here?
One of the key downside risks is more persistent global inflation and the need to tighten monetary policy further for many of the advanced economies as well as South Korea. Global interest rate could remain higher for longer, and this may have implications for South Korean financial stability, especially with a very high level of household debt among, housing market downturn. And also there's another factor that could actually affect the, economic outlook, which is a weaker boost from China's economy due to a deeper downturn in the property sector in China. China remains as one of the biggest trade partner with South Korea, so it may have some implications for South Korean economic growth in the short term and medium term. Apart from this, we have also very heightened geopolitical risks, and its impact on the oil prices and supply chain could also impact South Korean economic recovery in the negative way.
Okay, now amid the good and bad aspects, the KDI is set to release its economic outlook for the second half of the year later today. What are we expecting?
I think as we have discussed just now, we have seen a lot of positive signs of recovery, in September and in October. So I think growth is likely to improve in the second half of the year, and we could expect some of this message from KDI as well. However, the economic outlook is, as we discussed, subject to high degree of uncertainty stemming from external sector. So I think, going forward, restrictive stance for monetary and fiscal policy in Korea to counter, the high inflation, that would also be needed for the remaining once we see some sign of, reduction in the inflation.
All right, Professor, thank you for your insight today.
Okay, thank you.